Today we will discuss the various branches of accounting or subfields of accounting. Branches of accounting. So there are the various branches of accounting. So you know already what is accounting and what is the various the steps to be followed while writing accounts. But this is a different concept regarding accountancy, and here these are all the various branches of accounting. Financial accounting, management accounting, cost accounting, social responsibility accounting, and human resource accounting. Human resource accounting. Human resource accounting. So these are also called as the subfields of accounting. Subfields of accounting. And here financial accounting is the first branch, and second management accounting, third is cost accounting, next social responsibility accounting, and human resource accounting. These are all the various fields of accounting. And here what is financial accounting? So financial accounting is nothing but accountancy. So it is art of recording, classifying and summarizing of accounting information or money's worth values in accountancy. And finally, so with the help of this we can find the profit or loss, or it's normally called as business result, with the help of profit and loss account. And financial position is also determined with the help of financial accounting. So financial accounting is useful to the owner, particularly it is useful to the proprietor as well as related groups to the concerned entity. So with the help of this financial accounting, so for each and every business people can know what is their business result. So business result. So here business result is nothing but profit or loss can be determined by preparing the profit and loss account. So this is regarding the preparation of financial statements. And financial position. Financial position can be ascertained or determined with the help of the preparing the balance sheet. And here, so this financial accounting is historical in nature. It's historical in nature. So only the transactions or the financial matters which already completed are only recorded in accountancy, but not the future matters. So it's purely historical in nature. And with the help of this, the owner come to a conclusion what actually happened regarding the previous year or the last year. So whether he got the profit or whether he got loss, as well as what his financial position, what are the assets to him, as well as what are the equity, liabilities, and regarding all matters can be known with the help of the financial accounting. So financial accounting is helpful to the particularly to the proprietor or the owner of the concern, and it is also helpful particularly to the related groups, just like say for example investors and even the lenders to the business, and it also helps to the bank for lending purpose. So financial accounting is nothing but the accountancy which is useful to the owner in respect of various presentations of the financial information. And with the help of this also, even the taxes can also be calculated with the help of this. Say income tax, for income tax purpose also financial accounting is required. For even say payment of GST as well as even excise duty, for all other tax purposes also financial accounting is needed. Next, so management accounting. Here the accounting information which is useful to the managers, otherwise the people who manage the enterprise, is the main that's the concept of the accounting information which is required for managerial decisions is the subject to be studied under management accounting. So here there are the various functions of management. The management has different functions, just like they have the planning as well as controlling and decision making, various matters to be decided by the management. And here all the accounting information which is gathered from financial statements or financial accounting is converted into it's normally presented in the internal report, just like it's the internal reporting to the managers for their use in planning as well as decision making. And here say there are various techniques in management accounting, particularly to estimate, otherwise even to determine, otherwise to say estimate for future activities. Just like say for example budget under management accounting. Say budgets. So budget is nothing but pre-estimation of the resources and applications of funds, otherwise even the receipts and payments, or even the future activity. Budget is nothing but it's an activity regarding the future. So it may be, even you can prepare a budget for production, even budget may be prepared for sales, even budget may be prepared for cash, as well as even the budget can be prepared for each and every aspect. So based on the accounting information which is available with the help of financial accounting, so with that information we prepare various budgets. Say material budget may be prepared, so which is required on monthly basis or weekly basis like that, and even sometimes quarterly basis also. Just like even purchase budget can be made, and production budget is also made with the help of the cost information, and even say sales budget, as well as even say for example cash budget. So this budgeting technique is purely recording the future activity. So this is a technique particularly applied by the top level management. Even say marginal costing is there. This is also recording. This is most useful for the decision making, whether to produce the good or not. What is the sale price of the concerned good to be produced? At what level you have to produce the goods, and what the required quantity to be sold in the market without getting off any loss or gain. So that type of break-even, that's the break-even analysis as well as the decision making is done by using the marginal costing technique. And here this marginal costing with the help of marginal costing technique, so you can find in advance, so what is your break-even quantity of production, BEP, break-even point in quantity also. So before commencement of your production, you can decide so what number of goods you have to produce, either there's at least to be in the market. So it means no profit, no gain point. So at least the total revenue is equal to the total, that's the cost which is, that's the incurred for production of certain quantity. And you can say margin of safety. So if you have any sales more than this BEP, so that is called as marginal sale. That is called as the marginal safety. And even with the help of PV ratio and as well as with the help of the various other techniques, we can estimate the profit percentage as well as estimated sales to earn a desired profit, like that. So various the pre-estimations can be made with the help of marginal costing technique. And even there are the various techniques, just like say for example funds flow statement is there. Funds flow statement. So this is also most important, particularly for the decision making by the management. So what actually the funds, that's the flow in as well as flow out. So that's the resources as well as application of funds. So this can be studied with the help of the financial, that is the financial statements of two different periods. With the help of the two financial statements, in a sense, for example, balance sheet as well as the financial statements of profit and loss account of two different periods. If you take into these two, and you can, that's the determine how much funds are incoming and how much funds actually flow into the business and how much is outflow. So such inflow and outflow of funds can be estimated with the help of the funds flow statement. Similarly, cash flow statement is also there. So with the help of this cash flow statement, so you can find how much cash is already, that is the inflow during concerned period, and how much cash is outflow, whether the cash shortage is there or whether the cash, that is the excess payments or even the, say, whatever the various sources of, even say there are the various sources, just like even how much the cash inflow with the help of operation activity, with financial activity as well as the investment activities. Similarly, even how much is outflow, otherwise paid for the investment activities, operating activities as well as the financial activities. That is with the help of cash flow statement. Similarly, even ratio analysis technique is also there. With the help of ratios, even you can decide whether the financial position of position of the concern is to be, that's the restructured or not. So because there are the various standards for the ratios, so whether the company is following the concerned standard ratio, if the company is not be a standard, so it has to be set right with the help of the future activities by the management. And even standard costing or variance analysis is also there. Variance analysis. So it's also called a standard costing. So for each and every aspect of the cost, a standard will be fixed in advance, and the standard is always compared with the present cost. Normally the standards are fixed with the help of various principles, scientific principles. So after setting the standard, and once the standard is fixed, each and every period of cost, say this standard in a sense, see here standard for material, standard for material, even labor, standard for even overhead expenses. So these are decided in advance. So material, say in quantity, as well as material price, labor, there's number of labor, and as well as the wage rate, similarly even overhead rate. These are decided in advance. So whatever your concern is already decided or the management is set as target, whether it is fulfilled or not, whether the cost is below of that or not should be taken into consideration. So that is here normally the comparison between the standard and actual cost, we take it as a variance. The difference between the standard cost and actual cost is the variance. If the actual cost is less than the standard, so it's a favorable. It means there is less cost. When the cost is minimized, automatically get the more profit. Similarly, if the if the standard is more than the actual, that's a favorable variance. And if the actual is more than the standard, this is the adverse or unfavorable. Similarly, even number of labor is set for or number of labor hours set for one work is compared with the actual labor hours which spent for concerned work. And even wages, which actually fixed at the beginning, may be compared with the wages paid to the laborers. And even overhead expenses also, they are fixed in advance, whether the concerned overhead rate is applied or not, whether the standard rate is less or more than the actual is compared. If standard is more, it is favorable. If actual is more, it is unfavorable. And even so, whatever the variance, that variance can be rectified with the help of the various decisions taken by the management. Otherwise, they go for the corrective measures after getting unfavorable variances. The unfavorable variances can be set right with the help of the future activities. Next, third one is cost accounting. So cost accounting is concerned with, otherwise it is related to the cost of the production. So here this cost accounting represents regarding the manufacturing activity as well as even the fixing of sale price. So here various elements of cost and price. So elements of cost can be decided with the help of this cost accounting, and price of the good is also fixed with the help of the cost accounting. And here very important, there are the various techniques to estimate the cost also. Otherwise, to show the elements of various cost. Unit costing is there. It is also called as single costing or cost sheet. With the help of cost sheet, we can find what is the material consumed and what is the wages paid and what is the prime cost of the concerned product, and even what are the factory overheads or production overheads, and what is the factory cost. Similarly, even office or administration overheads, and what is the cost of production, and apart from that, even sales and distribution expenses. Finally, you can find the total cost of the product. So if you add some margin for the total cost of product or cost of sales, we get the sale price. So such price is also determined in cost accounting. And even with the help of cost accounting, we can find a profit on a contract by preparing the contract accounts. Even with the help of cross costing, we can find the profit at different stages of a product to be produced. Even job costing is there, and quotations are also there. These are all the various elements or techniques which are used under cost accounting. And then social responsibility accounting. Social responsibility accounting. Here, social responsibility of the company. So, particularly it is regarding the corporate sector, and here this social responsibility of corporate sector is more. So here social responsibility is nothing but the responsibility towards the society. All the companies, either directly or indirectly, they depend on society for almost all the factors which they need. Say for example, they depend on the public for getting of capital by issue of shares. In case of public limited companies, they get capital from the public in a sense society. Similarly, they depend on society for various human resource. Human resource in the sense employees. For all sorts of personnel, they have to depend on society. So, for getting of labor also they have to depend on society. And even ultimately after production of the goods, again they depend on society for sale of goods to the society. So that's right. So from the inputs to the outputs, for at each and every stage, each and every corporate, that is the enterprise, depend on the society. So that's why they have a lot of responsibility towards the society. So why in a sense here? Because they depend for each and every aspect on society. When they depend on society, so that's the they have to do some sort, otherwise they have to spend some amount. So regarding the society, so the cost incurred to give social, that's the help to the society or social activities to the society is called as social responsibility accounting. And the big concerns almost they have to provide various facilities which are required by the local society, just like even infrastructure facilities. For that they have to spend, and even say health facilities to be provided by construction of health, there's the hospitals, and even education facilities can be provided to the local public as well as even for their employees' children. Even various promotional, that's the activities can be taken up, that's by giving recreation as well as even good drainage facilities, roads, electricity. All these for this purpose, whatever they spend, it should be recorded. So that accountancy which deals with this cost regarding society is called as social responsibility accounting. Next, the last one is human resource accounting. Human resource accounting. In the name itself here, human resource. Human is nothing but employees or staff. Even employees to be concerned is also, that's a source to the concern. So the motivation of employees as well as even taking of challenging activities of employees only gives a good result to the business, otherwise profits to the business. And even the companies have to invest lot of money for that's the recruitment, selections as well as training purpose of the employees. That also, that's the here it matters in case of the present scenario. And here in case of that's the for selection purpose as well as training purpose, the companies have to spend lot of money. So whatever they spend for their training, as even recruitment training as well as there's the various other requirements of the employees that come under the human resource accounting.